Alright, now in terms of what's happening in the markets and how this is realistically going to play out, let's talk about safe haven investing. At the time I'm filming this video, gold has jumped to an all-time high of more than $4,700 an ounce. Silver followed closely behind at nearly $100 an ounce. And here's the key point that everyone needs to be made aware of. When the world's largest economy threatens its own allies with a trade war, investors stop taking chances. They move their money out of the US dollar and the euro, and they move into assets that historically have done well when everything starts cracking, like precious metals. Basically, in this case, gold and silver trade like insurance. The market doesn't like a lot of uncertainty, and when you have a massive event like this that could potentially spark a downward spiral that gets worse and worse, investors hedge with a globally recognized store of value that they could trust. But coincidentally, that also leads to a sell-off in the stock market. In this case, once tariffs enter the equation, the stock market stops asking which companies are going to be growing the most and starts asking which companies are going to get hit first. The reality is, when it comes to a trade war, there are always going to be winners and losers. And in this case, the biggest losers are going to be the companies who are most reliant on cheap imports, supply chains, and international customers. Why? Well, the second tariffs go into effect, costs go up. And as soon as those costs go up, companies either absorb the loss themselves or they pass it on to the customer. Either way, earnings usually take a hit, and as a result of that, the stock price declines. Now, in this specific case, Europe could remain incredibly vulnerable, because if Europe retaliates, we could easily see costs increase across automakers, luxury goods, industrial manufacturing, and even pharmaceuticals. And once markets begin to sell, usually there is a cascading effect across everything, which leads to a downward cycle of a falling US dollar. Look, in a normal market, anytime there's uncertainty, money flows into the US dollar as a safe store of value. But in this situation, investors are watching the United States threaten their own allies. So they're starting to wonder, if the US is willing to destabilize their relationship with Europe over Greenland, what happens in the future if the disagreement is even bigger? This is causing some trust and confidence in the United States to slowly chip away. Our dollar is purchasing less and less every year you hold on to it. And once people start losing faith in our entire system, money flows out into alternative assets or other countries who pick up where we left off.